All right, welcome back. So, November 6th, what a day on Wall Street, right? The markets took a serious hit, and it's got everyone talking. Today, we're going to peel back the layers and figure out the story behind those big red numbers. What really happened?
And here's the number that was plastered everywhere, a 1.9% drop for the Nasdaq. I mean, that's the steepest single-day drop we've seen this week, a real gut punch for the tech sector. But you know, it wasn't just a tech story. The pain was spread around a lot more than you might think.
And you can really see that here. I mean, look at this table. The losses were, well, they were everywhere. S&P 500, Dow Jones, even the Russell 2000 small caps, everything got hit. But, and this is a big but, take a look at that year-to-date column. We're still way up for the year across the board, so this isn't a total collapse, right? It's more of a sharp pullback. The real question is, what was the trigger?
Okay, so let's get into the why. The main culprit, the absolute epicenter of this whole thing, was a big sell-off in tech. And that's ironic, isn't it? Because tech has been the darling of the market, the engine pulling this train for pretty much all 2025.
Yeah, some of the biggest names got hammered, especially in the AI world. We're talking Nvidia, Oracle, Palantir. They took a real beating. And it seems like investors are starting to get a little antsy about all the money being poured into AI. You know, the big question is starting to bubble up. Okay, we're spending billions. When do we see the billions in profit? It feels like the market's just starting to worry that maybe, just maybe, these stock prices got a little ahead of themselves.
But here's the thing, and it's a really interesting take. The pros, the analysts, they aren't exactly running for the hills. You see this quote from Daniel Skelly at Morgan Stanley? He's basically saying, hey, this is normal. In a bull market, you get these corrections. It's not a sign of the end times. It's actually kind of healthy. It's like the market letting off a little steam.
So, it wasn't just about tech getting a haircut. No, there was more going on in the background. The market was also trying to navigate through this fog of economic data and weird commodity moves. It was all very confusing. And this slide, man, this perfectly sums up the problem. The government is shut down, right? So we're not getting the official jobs numbers from the Bureau of Labor Statistics for the second month in a row. Investors are basically flying blind. All they have is this private data, and frankly, it's not looking great. It's pointing to a cooling job market with October layoffs at their highest level since 2003. So, imagine being the Federal Reserve right now. You've got no official map, and you have to steer this massive economic ship. It's a really tough spot. You're hearing Fed officials sound, well, really cautious. You've got Mester saying inflation is still the bigger boogeyman, and then Goolsbee basically says, how can we even talk about cutting rates when we don't have the data? They're stuck.
And these mixed signals, these crosswinds, you see them in the commodities market too. It's like a tug of war. On one side, you have crude oil prices dropping below $60 a barrel because of Saudi price cuts and fears there's just too much oil out there. But on the other side, gold is surging towards $4,000 an ounce. Why? Because when people get nervous, they run to safety, and gold is the classic safe haven. So the market is literally being pulled in opposite directions.
And if that wasn't enough to juggle, you also have to throw geopolitics into the mix. All these global events were just piling on, adding to this risk-off feeling, which is just Wall Street speak for, I don't want to take any chances right now. I'm playing it safe.
Back here at home, the government shutdown is starting to have real-world consequences, beyond just some missing reports. We're talking about a planned 10% cut in daily flights. That's something you can feel, something that directly impacts business and travel. And when investors see that kind of friction in the system, it spooks them.
And then you look across the globe, and the situation in Ukraine is getting more intense. These battles in the Pokrovsk region, they're a huge concern, because any escalation over there could have a ripple effect on everything from energy prices to global supply chains. It's a major source of instability.
At the same time, you've got these super high-stakes talks going on between the US and Saudi Arabia that could affect oil policy for years. Then you've got the COP30 climate summit. It's just, there are so many moving parts on the world stage right now, and each one adds another layer of what if for the markets.
Okay, so you've got a tech sell-off, a fog of economic uncertainty, and a whole heap of global jitters. After you stir all that together, what do you get? What's the next move? That's the billion-dollar question, right?
Well, a huge piece of the puzzle is the Fed, as always. Right now, traders are betting there's about a 62% chance the Fed will cut interest rates in December. Now, that's still the most likely outcome, but it's important to know that that number used to be over 90%. So you can see the doubt creeping in.
But still, all eyes are on what the Fed does next. So what's the playbook in a market like this? The advice from the experts is pretty clear. Play defense. This isn't the time for wild, aggressive bets. It's about being smart. Diversify your holdings, maybe look beyond tech, hedge your bets with things like gold, and most importantly, stay on your toes. You've got to watch the news, watch the Fed, and be ready to move.
And that brings us back to this central idea, which Chris Murphy sums up perfectly. The short term might be choppy, sure, but a lot of smart people think this is just the market, well, skimming the froth off the top. It's not the start of some big, scary crash, but more of a healthy reality check.
Which leaves us with the one big question we're all wrestling with as we look forward. Was this just a healthy correction, a needed pause to catch our breath in a bull market? Or was it the first tremor, a warning shot that there's more turbulence ahead? What do you think? That's the answer we're all waiting for.